Welcome to TradeNMBI.com. This is John. This report is for the 1st of July, and well, we ended the month still and moving up towards highs right there, very close now. And not a surprise, but we had the magenta here on the MBI readings above yellow, so it's a continuation. But we were having the four short cover here of the rising MBI weight, and then the MBI weight retreated. Well, it's beginning to at least to start. For the beginning of the month, we have cyan under red finally, so catching up to what the Nasdaq was already doing, and keeping things in line. We're starting to reach the 15 level, so it gets into that warning state. But you can see we've already eclipsed the previous peak. So it's congruent as far as shakeout, everything else, and the continuation in that will last. Well, now you're into a holiday week, so yeah. And then we're going to be starting to get a lot of details. Fed chairman is going to be speaking later for the ECB, and all these other details on manufacturing. And they're all going to look fairly decent. The real question is going to be coming after this, and whether there's going to be a spike from that brief war, and whether or not that had any material impact. But I think that you're going to start to see it in unemployment numbers. The fact that you've had this shift in the number of government employees, as well as removing, some of the self-deportations that took place, and that whole mix going in there. And of course, now you get the new feud between Trump and Musk, and it's interesting because before it was all about the spending and the big beautiful bill and how horrible it was, but now all of a sudden Elon's talking about the fact that he's not happy with the EV mandate removals and the subsidies, and of course that's what Trump said it was originally, and Elon denied it, but now all of a sudden that's the focus of the discussion. So, well, I guess maybe we have a clearer idea of really what that argument was about, because that is his bread and butter. And he's not wrong to say that oil gets subsidies all over the place, and they do. So you're just favoring one over another. Yeah, and he's just vying for his portion of the pork. But no one's going to argue that Tesla, SpaceX, all of that have been super recipients of government monies without question, and neither of those companies would exist without those government subsidies. So take that for what it is. So from an NQ standpoint, as long as that sign's under red, you get a little bit of a dip in short-term buyers, but as long as you're seeing DOC with green, red rising, you should still continue. It's going to be one of those soft things. And the irony of it is that you're going to get one sell day that's going to wipe out all of that. And that's exactly where that would take place. And of course, this is where the Treasury market is starting to squeeze the Fed a little bit here, as their expectation is that as this weakness starts moving forward into the fall on that, because of the delay and the higher rates, you're going to start to see housing slow down, things like that, in a much more dramatic fashion, at least from residential. You've already had it in the commercial space, but that could start to have an impact, because again, that moves a lot of activity in the economy. And if that starts to fade off and you have an additional rental supply in that, it reduces costs. So deflationary, and if you get the deflationary momentum going too far too fast, it's a little tough to stop that as it starts to cycle. But you're not getting any help with oil. So as long as oil remains in this way, unless you start to see some kind of crude build, this is still continues to put, I think, outside pressure, or at least a stabilizing level that prevents inflation from completely being wiped out. And of course, everyone's so excited about the euro because they just keep cutting rates in all the different areas and making the yield return ridiculous to keep your money in a euro. It just financially, I understand that they need to prop up some of these European countries at this particular stage, particularly given where the ECB is as far as how they're going to handle the spending for war effort and everything else. The math doesn't make sense. And, again, when you have control over an entire currency, you can prop these things up for quite some time. And as long as oil is held in check, the ECB should be okay. And Their inflationary numbers, they're just going to absorb all that and pretend like it never happened. From a gold standpoint, they're popping back up a little bit just because it had finally reached exclusion point right there, and you've got the little bit of a magenta, and it could actually be quite a spike here if magenta rises with the MBI white. That's a classic short cover scenario, but you'd have to see that shakeout move to positive. Uh, the change from banking is going to drive gold prices at this point going forward, because with the Fed change and allowing banks to use physical gold as an asset to loan off of in tier one, that's a huge change, and it's going to make a significant demand on physical gold. No real activity from a Bitcoin standpoint, and same thing with ETH. They're just going to do their usual bounce back and forth. So you can see we started with the early pump, and then MBI White expressed itself there, and you didn't even get a move below 76%. So that collapsed pretty fast. And when you don't get that kind of follow through, you expect another run to the upside, and that's exactly what happened. And that pushed it to the new highs. But then the MBI White spiked again, and also collapsed pretty darn quick at the 76%. So you didn't even get a move down towards the 50, and that would be the expectation. But of course, you've got cyan under red, which definitely it keeps that from collapsing any further. And you've got that steel reset here as well. So plenty of support from that standpoint to keep things from going anywhere. And soft week, with the fourth coming up at the weekend. A lot of people leave early, get an extra longer vacation, and that just creates a little bit more volatility setup. So you can see early on, it was just softest. Later in the day, everything started to spike, and then boom, they just filled it all the way back in. And here we're in just a blah from a European session, because everyone's waiting to hear what the latest is, and we'll start to get all the different numbers come through. I don't know that these latest ones are going to be all that significant, but I think probably as we get towards the middle of the month, we're going to start to get significant data that will really start to push the tide in one direction or another. I think that everyone already agrees that the Fed has already been too late, and it's going to be come at a cost. The question is how much of a cost. How far will they decay GDP because of it? You're already going to see it drop because they use government spending as that. So if the big beautiful bill passes and you've got all that new spending coming in there, that could be the critical element needed to stave off the disaster. And the big beautiful bill is not all that beautiful when you consider what it does to spending in that. Fine, it gives them some of their priorities, but it's still just pork barrel stuff anyway. And, you kind of eliminate all of the cuts that you do from Doge and that. But you saw big number changes in Social Security in that when they cut out all those people over 120 years old, and it made a difference even with the COLA increases. So there's that. Anyway, anything relevant, I'll put it on the team chat for us. Have a good one. Trade well.